The tariff war between the world's two largest economies is heating up as tensions between the two countries continue to rise. In the latest tariff tussle, China's announced it will impose 84% tariffs on US goods from Thursday, up from the 34% previously announced. Now, this comes after US President Donald Trump's sweeping global tariffs plan took effect today. About 60 countries dubbed by the Trump administration as the worst offenders will be charged higher import taxes. Including in this round is a massive 104% levy against China. Well, China's vowed to fight until the end. Meanwhile, the rand's currently trading at 19 rand 75 to the dollar, 25 rand 29 to the pound and 21 rand 80 to the euro. Well, for more on this developing story, we're joined now by SABC News economics editor Tshepo Mongoai. Thanks for joining us. Goodness me, what is happening?
Well, it was expected. In fact, many market analysts were expecting this announcement to come just before the market, US market opened for maximum impact. But indeed, we're not far from the US market open. So there's going to be bloodbath when Wall Street opens. So there's going to be a lot of pain in there. And it was intentional by the Chinese government. They've made it very clear that they are determined and they have means to fight this particular war. So it's about who has more ammunition to deal with this, and definitely it's going to be a show of power. Unfortunately, there's going to be a lot of pain. The European Union too, they've said that they are going to retaliate. So we expect the EU also to come up with a tariff announcement very soon. So this will just add to the pain that we're seeing. And what is very interesting and strange, US Treasury, the US bond market are seen as a safe haven where people park their money when there's uncertainty. So what we are seeing is that people are withdrawing from the US Treasury. There was some improvement a couple of days ago where the 10-year yield was below 4%. Now it's above 4%. So it's telling you that there is no appetite for those yields, for those US Treasury. So there is a concern globally in terms of where to put the money. So I can't tell you where people are putting their money. Probably just moving into cash at the moment. It's
no laughing matter at all. Now, an interesting thing for me, and I don't quite understand it, China has indicated that they are willing to chat to the US administration, but now they've gone and done this. So are they trying to force the America's hand?
Like I said, it's a show of power at the moment. It is to show that they actually can and they have the means to fight this particular war. We don't know what is the bottom, where's the end game. That's more concerning. And Jerome Powell, the US Treasury, indicated that Federal Reserve, the Federal Reserve Chair, indicated that we don't know the size and the scale of this particular trade war, but there are definitely going to be casualties. I mean, for us as developing countries, it's even more severe. And we know these things, they have a lag. Currently, perhaps we might not see the impact, but 5 months, 6 months down the line, that's where we are really going to start feeling the pain. And unfortunately, for emerging economies like ours, and for those countries that rely on aid, it is really going to be bad. I mean, yesterday we were speaking to the CEO of Group CEO of MTN. And he raised concern about they do business in about 16 countries, and some of these countries rely on aid, and the US has pulled that aid. So when you're going to have the impact of these tariffs, and the countries that have had this particular aid, and they no longer have that buffer, we're going to see a lot of human suffering.
Is China looking to build relationships with other trading partners like the BRICS countries? Do you think that's on the agenda?
No, absolutely. That is going to happen. In fact, China, somebody was saying that China, because they've got various scenarios that they map out in their economy for various economic situations that may happen. And they were saying that China actually has been mapping out this particular scenario to happen. So it's no surprise. They are prepared. They are ready for this. So they're not just talking that they have means and the determination to do this. It is in their plans, and we know that the Communist Party of China, they have long-term plans, so they are going to show that they're actually prepared. But it's also a show of power to say that they are power in the world, so
to be reckoned with.
Absolutely. So it is the smaller economies that are going to suffer. Yes, we can find alternative market. Yes, we can try to develop, but it takes time to develop markets. But also, you need matured market. You need those matured market in order to where to take your produce or whatever it is. So it's not an overnight thing. The approach of many of the South African business, especially those that have benefited from AGOA, is that let's negotiate. Are we sure that we have negotiated? Sure. Because this means a lot to us before we can say let's explore other market.
And then just lastly, with fears of a recession hitting globally, what is South Africa doing now to prepare for that?
Yeah, well, I suppose, everyone is trying to see, run for cover and see what is it that they can protect from their economy and also the GDP. But the reality is that global GDP is going to take a pain, so there's going to be a lot of revision downward on this. The ability to raise capital, Juliet, is very, very important.
Yeah.
We as South Africa, some of our projects that we've identified, we say that we'll go to the market with the private sector and undertake those projects. It's going to be very, very difficult to raise money in the capital market. If we do, it probably will be very, very expensive because there's so much uncertainty that's going on. So we are likely to see quite a number of projects that we have relied on in order to drive economic growth, because we said infrastructure in our case is key. Just energy transition is very key, but we don't have the money, but we will say that we'll work with the private sector and go to the capital market.
Thank you so much for coming to chat to me this afternoon. Some very valid points and interesting insights there. That was our SABC News economics editor, Tshepo Mongoai, chatting about China's retaliation imposing 84% on the US imports.